Subscribe to my channel Report Stock.
Okay, let's unpack this. Have you ever stared at a pile of company reports, quarterly results, or, strategic announcements, just wishing someone could cut through the noise and tell you what really matters?
All the time. It's easy to get lost in the jargon.
Exactly. That's precisely why we're here today for another deep dive. Today, we're dissecting the latest from Capstone Holding Corp. We're looking specifically at their Q2 2025 financials and some strategic stuff they announced back on August 15th, 2025.
Right.
Our mission really is to pull out the most important insights about their growth, their profitability strategy, and these pretty ambitious expansion plans they have, all straight from the press release you shared.
Yeah, and it's fascinating, isn't it, how one source, just this press release, can give you such a clear window into a company's strategy and action. You see them balancing, the immediate numbers, the financials, with where they want to be long term.
Right. Positioning.
Exactly. So we're not just looking at what they reported, but like you said, why it matters for their overall direction and maybe what signals it sends for the whole building product sector.
Okay, so let's set the stage a bit. Who is Capstone Holding Corp?
Mm.
The report paints them as a diversified platform, building products businesses,
Diversified, yeah.
focusing on distribution, owning their brands, and making acquisitions. And their subsidiary, Instone, seems pretty key.
Instone's big for them. They serve, 31 states?
Yeah, 31 U.S. states,
Yeah.
with their own stone veneer, hardscape stuff, even modular masonry systems. Quite a range.
And that description really leads into their core strategy, doesn't it? It's all about disciplined M&A, running things efficiently, and building up that portfolio of brands they actually own.
Building something scalable and durable, as they put it.
Precisely. And these Q2 results we're looking at, they seem to show them, continuing to execute on that. Pushing for organic growth, getting those margins up, and finding acquisitions that add to the bottom line right away.
And they're definitely not hiding their light under a bushel about the goals. That revenue target,
Oh, yeah.
$100 million revenue run rate. They're aiming for that by year-end 2025 or maybe early Q1 2026.
Yeah.
That's ambitious.
It certainly is. Sets a high bar.
Now, here's something that really jumped out at me from the report, the gross margins. A significant jump in Q2. This wasn't just a little nudge upwards.
No, you're absolutely right to focus on that. The numbers are pretty compelling. They expanded gross margins from 21.4% a year ago to 24.4% this quarter.
Okay, so
That's a 310 basis point expansion, or 3.1 percentage points, which is quite a leap in just 1 year, especially in this kind of market.
So what's behind that? How do they manage that kind of growth? Is it just the market lifting them, or is it something specific Capstone is doing?
Well, according to the release, it boils down to two main things, both internal. First, they sold more of their own brands.
Okay. Higher margins there, presumably.
Typically, yes. And second, disciplined cost management. So it suggests they're not just riding a wave, they're actively pulling levers inside the business. Selling more own brands could mean better pricing power, or maybe their products are just hitting the mark.
Right, creating some stickiness.
Exactly. It's not just about cutting costs, though that's part of it. It's making the core operation more profitable. And they do mention their SG&A costs. Selling, general, admin are staying on track around $8.5 million annualized. That's important context for their profit growth goals.
Okay, that makes sense. And sticking with strategy, the report flags something big. First acquisition nears close. Sounds like more than just talk.
It really does. Seems like a cornerstone move, potentially. They've signed an agreement for a company described as a Carolina-based stone company.
Carolina-based.
And it's expected to close really soon, like next 10 days soon. The key phrase they use is immediately accretive to both revenue and EBITDA.
Right. Accretive, meaning it should boost earnings right off the bat.
Correct. Even after accounting for the deal costs, it's expected to add to earnings per share and contribute positively to their core operating profit, their EBITDA. That's a good sign.
It's a very good sign.
Yeah.
So beyond the immediate financial boost, why this specific company? What makes it strategic for Capstone?
Well, a few things seem to be at play. First, location. It strengthens their foothold in North Carolina.
Which they see as a gateway.
Exactly, a gateway to the Southeast, which is a high-growth region. Second, it adds premium brands to their mix. Brands they believe have potential for, again, margin expansion.
Tying back to the profitability focus.
Right. And third, it expands Instone's distribution platform. Wider reach, more products to more customers. It fits nicely into the overall picture.
Okay, so this sounds like maybe the first domino. What about further down the line? Do they talk about like a pipeline of other deals?
They do. They describe it as an active, favorable pipeline. Multiple other targets are apparently under review.
Favorable, huh? What does that mean in terms of price?
They mention attractive valuations around 4 to 6 times EBITDA. And interestingly, a good chunk of the payment, 20 to 45%, is planned to be non-cash.
So using stock or maybe earnouts, smart way to conserve cash.
Yeah, very smart. It lets them grow without just burning through cash reserves. And they project at least one more acquisition closing before the end of this year, 2025. So the pace seems pretty quick.
Wow. Okay, so acquisitions, expansion,
Yeah.
that all costs money. How are they funding this? You said they're conserving cash, but deals still need capital.
Good question. This leads to what they call their flexible capital ready position. They've secured funding sources like an equity line of credit, an ELOC, and also a convertible note.
Flexible capital, so not just traditional bank loans.
Right. It's about having options. In a market where interest rates can be unpredictable, having access to capital without just relying on high interest debt or immediately diluting shareholders by issuing lots of new stock. That's a big advantage.
Gives them agility.
Exactly. It lets them move quickly on those accretive acquisitions when they see them, deals that grow revenue and profit.
Makes sense. Okay, let's shift focus slightly to Instone, the subsidiary. What's the outlook there for the rest of the year? Any more upside expected?
Yeah, the report sounds pretty optimistic about Instone's second half. They expect Q3 order volume to bounce back as market conditions, hopefully, normalize a bit.
Normalizing. Maybe things calming down.
Possibly. Plus, there's the potential kicker of interest rate cuts later in 2025. If those happen, that could definitely give demand a boost, especially in building materials.
Turkut?
And internally, they're not standing still. They mention ongoing product rollouts and pushing into new territories, which should help drive growth regardless of the broader market swings.
So it really sounds like they're firing on multiple cylinders. Did the CEO weigh in on all this in the release?
He did. Matthew Lipman, the CEO, he basically summed it all up quite neatly. He said it was an exciting quarter for Capstone. He highlighted the Carolina acquisition, calling it immediately accretive and key for expanding into a fast-growing market. He also pointed directly to the margin growth from 21.4% to 24.4%, crediting the own brands and cost control. And he finished by saying, essentially, that they're executing on both parts of their strategy: smart acquisitions and strengthening profitability.
Wow. Okay, that really ties it all together. What a deep dive into Capstone's Q2. You see a company that's not just chasing growth, but very strategically managing its margins and expanding its footprint through these smart-sounding acquisitions.
Yeah, it really does illustrate that strategy of building something scalable, something durable, even when the market's a bit choppy.
It feels like a solid plan in action.
It does. And connecting this to the bigger picture, maybe it raises a question for you, the listener, to think about. How does a company's ability to secure flexible capital, like this ELOC or convertible note Capstone has, how does that fundamentally change its growth path and its resilience when markets fluctuate? You know, think about how that approach differs from companies maybe stuck relying only on traditional high-interest debt or constantly needing to issue new shares. What kind of competitive edge might that flexibility give a company like Capstone?
It's a great thought to mull over. How financial strategy enables operational strategy. Excellent point. Well, we hope this deep dive into Capstone's latest moves gave you some valuable insights, maybe a few aha moments about strategic growth and execution. Until next time, keep learning, keep questioning, and keep exploring.
Subscribe to my channel Report Stock.